Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I thought I would try to do something slightly different here. The first thing I'm going to show you is the simulation gets even more mind-blowing, okay? Some of you are pointing out things that showed that this simulation is even more mind-blowing, so I'm going to share that with you. And then the theme of today, I think, is going to be that there's no substitute for experience. And I want to make it clear that what happened on Monday, right, we experienced a piece of history. Yesterday was indeed a piece of history, so I'm going to show that to you. I want to emphasize the importance of not getting disheartened, because I know a lot of people have shown up to this market in the last 1, 2, 3, even 4 years, and that was the first kind of event of that magnitude that they've ever experienced. And I know it can be very disheartening, especially if you were in the position where you were thinking, maybe I should sell, maybe I should lighten up, and then you chose not to, and then all of a sudden the markets crash and you find yourself looking at your portfolio, kicking yourself for making the wrong decision. So I'm going to talk about not getting disheartened, understanding the true context of what happened, because what happened yesterday was actually very, very rare. So again, I'm going to talk about that. I'm going to also talk about not catching knives and how I'm going to deal with this, because I see a lot of people all over the place that are saying, frankly, inexperienced things. They're saying things like, buy when there's blood in the streets, or if you don't buy the dip, then, you know, you're a coward, or you haven't got any balls, or whatever it is. And the reality is, okay, this is a business. This is a business, and if you don't treat it that way, okay, then you can get very, very wrecked trying to catch knives, okay? And sometimes you can get the handle, don't get me wrong, and then you can tout online that you've got all the glory, right, for buying when there was blood, and that was the actual bottom. But the reality is, if I throw a knife towards you and you try to catch it, you may well lose a couple of fingers, okay? This is just the absolute reality of this world. And so I thought the best way to illustrate this is to go back and do a bar replay of two very similar cases that I have personally traded through, okay? And that is Bloody October of 2018 and the C19 plunge in March of 2020. I traded through both of those, and again, it comes back to there being no substitute for experience. On Friday, when I went flat in the stock market, one of the reasons I cited for wanting to go flat there was because I said it reminded me very, very much of the C19 plunge and, of course, Bloody October. And again, if you were trading through those, then you probably saw what I saw. But if this is your first rodeo, if this is the first ever one of these events you've seen, if you weren't a trader during 2019 and 2020 or 2018, then how would you know how to deal with this, right? This is just all part of the process. And so this speaks to not getting disheartened as well, right? If this was the first one of these events you've experienced, well, you're still here, right? As long as you've got some chips, then you just learned about 12 months worth of trading in a week or so, right? By the time this week is complete, you will have gained an awful lot more experience than just when markets are very easy and trending up. So there's a lot of opportunity for personal development, personal growth, gaining a lot of experience here, okay? It's these kind of events that separate the pros from the people that get wrecked and quit. So I thought it would be useful, like I said, we're going to do some bar replays of those two prior crashes that I believe are quite similar. I'm going to show you exactly how I dealt with them and a very simple method that I used in both of those prior two cases, and I'm planning on using again to let me know whether or not I need to be in the market. As I often say, there's a time to be in the market, there's a time to be out the market, and there's a time to go fishing. Right now for me is a time to be out the market, but you better believe the moment I think it's time to get back in, I want to be back in, just like the way I treated the C19 and the Bloody October events. So again, there's no substitute for experience, but just before we get there, I've got to show you how mind-blowing this simulation gets. Yesterday, I showed this, okay? And this is very, very eerie as it is. This is back in 2007. We had this second angle, a violation to the downside, and then we quickly recovered it and went on to set a third and final blow-off top angle before entering the GFC of 2008. And all of this occurred with a VIX spike. Okay, and then when we look at the setup today, structurally, it's very, very similar. We've got a loss of the second angle, and if history is to repeat, we would therefore be hoping to see a quick reversal and a third and final blow-off top angle, and then a breakdown and the end of the financial world. Of course, I don't mean that, but you know what I mean, right? The end of this big bull market. And notice as well, similarly to back in 2007, this occurred on an enormous VIX spike. And I also showed this from yesterday, which was an excerpt from the CNN article that is dated August 16th, 2007. And the excerpt that was shared with me was this one, okay? After holding short-term interest rates steady at 5.25% for more than a year, many investors and other Wall Street pros are looking for the Fed to cut interest rates at the upcoming policy meeting September 18th. Okay, so here's two more pieces of craziness in terms of history repeating. Not only have we got the similar technical setup as I just showed you, we've got the same interest rate that's been held there for more than a year, and the next policy meeting is at September 18th. When we pull up the CME, when is our next FOMC meeting to discuss these rate cuts? Okay, 18th of September. So eerily similar in the news. And again, it gets even more eerily similar because whilst everyone is waiting to see what the Fed will do at the next meeting, whether they drop 25 basis points or even 50 to really soothe the markets, some analysts have called for the central bank to step in earlier ahead of the meeting. Again, eerily similar to today. Today, we've got the same interest rates that have been held there for a year against the same technical setup with a meeting on the exact same day. And again, the market is looking for at least a 25 basis cut, if not 50. And there are plenty of people, myself included, that are suggesting we may have to see them step in between meetings and perform an emergency cut in August if things don't start to get better. So, of course, all of that is pretty simulation-ish, right? That speaks to a simulation. This is not history rhyming. This is history outright repeating. But here's where it gets even more wild for me. Some of you eagle-eyed viewers were pointing out that the top, okay, right here, this is the top before the shakeout, before the third and final blow-off top angle, occurred just days away in terms of the calendar, okay? So first of all, 19th of July for the 2007 top, and our most recent top at the hard right edge today was the 10th of July. So just 9 days difference between those two. It gets even more eerily similar to the 2007 scenario because take a look at the price back here, okay? The topping price was 20,688, okay? And the topping price back here for that July top, okay, before the shakeout and then the third and final blow off top angle was 2,062 points. So almost exactly 1/10. And take a look at the number that the low formed at back here, okay? This low was down here at 1,801 points. And today at the hard right edge, we are sitting just under 18,000 points. So these numbers are eerily similar, okay? You can pretty much just add a zero onto the number from back in 2007 and get these same numbers. The dates are incredibly similar. Like I said, the technical setup under the hood with the second angle violation and the VIX spike is incredibly similar. And so is the backdrop with the Fed and the news articles out at the moment, right? So how is it that history repeats to the tick like this? How exactly is it that history repeats just like this? And the question I want to ask you is, because it's so similar, okay, because these two setups are so similar, is it therefore reasonable to expect this to suddenly deviate away now? Or is it reasonable to think that this is maybe actually on the table, right? Something like this, blow off top third, and then we crash. Which, of course, in today's candles would look something like this. Okay, is this possible? One final squeeze before getting the opportunity to sell the top on a third and final angle violation. So let me know what you think. As I said, I'm going to talk about what's just happened, and then we're going to do some bar replays and we're going to show you exactly how I plan to handle this situation. When I was talking about there being no substitute for experience, this is the kind of thing I was talking about, okay? Everyone, including me, as of last week, was calling for one more leg higher, okay? I was in that camp of people. But when presented with new data on Friday, I pivoted my stance. And so far, that seems to have been the correct move. It also demonstrates discipline, okay, which is built over time with experience. And I also demonstrated that I'm not married to any one idea, okay? The moment the market is ready to move against me, I am ready to start getting defensive. And once again, I said, look, if new data presents, I'll pivot immediately back to bullish. If that setup I just showed you with a quick recovery and a third and final blow off top angle presents itself, then I will immediately flip back to being maximum long across the board. You'll see Camel being, again, the biggest bull on YouTube and Twitter up until we get that third and final angle violation. But I said, here's the reality of it, okay? Sitting here calling for one more leg in the face of something that could quite easily become a C19 plunge is reckless. And this is the reality of where we are today. Nobody, and I do mean nobody, knows what's coming next, okay? We may well be about to just quickly reverse and print new all-time highs, or equally, okay, there could be many weeks of further downside left to come. Anyone pretending to know here is lying. That's the absolute truth. You can have your analysis, you can have Elliott wave counts, you can have cycle theory. It doesn't matter what it is, okay? They can all give you an idea of what you should maybe expect. But the reality is, absolutely nobody knows what's coming next. And this is what brings me on to the topic of experience, okay? The people that you see online blindly buying dips, saying things like, buy when there's blood on the streets, completely married to their up only one more leg higher ideas, really are showing one of two things. They are either showing a lack of experience in markets, because as far as they're concerned, okay, there's no chance we can continue down. Or they are showing you a lack of discipline, because when presented with new data, as we all were on Friday, okay, we all had a chance to get flat and get out of the way of the market. And if you thought to yourself, well, I should probably sell here and didn't, then the learning curve for you there is you lacked the discipline to pull the trigger on the day and protect your capital. Now, you might get away with it. Maybe this time around, we all get lucky, we get one more all-time high and it's easier to sell the top, okay? Maybe. That's what I'm hoping for, and I'm sure you're hoping for that as well. But if you didn't, you can promise yourself today that you're never going to lack that discipline again, okay? You're never going to marry an idea. You're always going to be open to pivot in stance, shooting first and asking questions later. And if you do that, like I said, it speaks to you being able to gain a year's worth of experience in just about a week, okay? So welcome this volatility. Even if you've got hurt, remember, most people will quit within 3 years of starting to trade. So if you survive this, if you can promise yourself you'll learn to manage risk and learn to be more disciplined and learn to be more open to all possible outcomes, then you are highly accelerating your path to success as a trader versus other people that are just blindly buying dips right now, doubling down. Because if you double down and go all in, okay, and we have another Black Monday event next week, then you're wrecked. Okay, and we can all pretend like we know what's going to happen and it's up only, but the reality is that's not how markets work. And so this is where you find out who the real traders are, okay, versus just those that make predictions. Real traders have locked in and protected gains because they understand they don't know what's coming next. They understand anything and everything is on the table, and they understand that if they do not humble themselves, the market will do the humbling for them. Everyone else is currently holding the bag, and their strategy is to hope and pray that the markets are going to be merciful. Hope and pray that there is indeed one more leg higher. But if you marry an idea, you will get wrecked. And that's because this is business. It's not about being right or wrong. It's not about I told you so's, and it's not about clout. For a lot of people online, it is. Okay? But those clout chasers, those people that want to say I told you so, those people that are married to an idea, there's definitely one more leg higher. They're only going to survive if the market moves higher. Right? If we continue down like we did in C19 or during Bloody October, which I'm going to show you in a minute, then all of those people are wrecked. And that's the reality. This is where you find out who the real ones are. And once again, it goes back to what I was saying earlier. The people that are out here saying, buy when there's blood on the streets, okay, everyone's a pussy for not buying the dip, where's your balls, all of that, okay, that doesn't fly if this dip has not finished dipping yet. Really, all that shows is either a lack of experience, i.e. you haven't seen what crashes can do and how quickly risk can happen, or it shows a lack of discipline for you to be able to hold your hands up and say, you know what, I think I'm wrong. I better get out of the way of the market. And I think one more important point to make here, because a lot of people don't like the idea of being out the market, okay? But there's always plenty of time to get back in. Yeah, sure, you might have to pay a slightly higher price, okay? But remember, trading is not about buying the bottom and selling the top. It's about catching the meat of the move in the middle. And I would much rather be slightly late to a trade in exchange for increased confidence and quality in the setup, rather than just try and stab in the dark or catch that knife and lose half my fingers. So with all that said, I think it's important to understand exactly what yesterday was. Yesterday was a piece of history. It was the first time in history the Nasdaq was down 1,000 points in a single day. It's not the biggest downside move the Nasdaq has ever seen in terms of percentages, so some of this speaks to the fact that the Nasdaq was coming off a 20,000 handle. But at the end of the day, data is the data, and that was the first day we've ever seen 1,000 points down for the Nasdaq in one single day. So understanding, if you're disheartened, if you're thinking, wow, I don't understand, how did I get wrecked? Okay, these events don't occur all the time. This is very rare. We lived through a piece of history, and if you're still here with some chips on the table, you are going to do better than most. And to further support this idea that we did live through a piece of history yesterday, okay, Japan's Nikkei logged the worst day since 1987's Black Monday crash, okay? I'm sure once we get out into the future, we'll look back at Monday just gone as Black Monday of 2024, okay? I'm forever going to remember Monday as Black Monday of 2024, just like I remember March of 2020 as the C19 plunge and Bloody October as October 2018. Yesterday was one of these events. It was one of these white swans or black swans or grey swans, whatever you want to call it. And again, 12.4% in a single day for the Japanese Dow is not nothing. And so I know it hurts to lose money. Believe me, I've done it plenty of times, okay? But do not get disheartened, okay? This is not normal and to be expected. This was a Black Monday event, and sometimes this happens. And so then the question becomes, okay, Camel, so how do we actually deal with this, okay? If we're not allowed to come out here and blindly buy the dip, Okay, and remember, sometimes that works, but you are essentially gambling. As promised, I'm going to show you a very simple method for dealing with these types of crashes, one that I have used personally, one that I know works, it's tried and tested, and I'm also going to use this bar replay to illustrate why, okay, you probably don't want to be out here blindly buying dips, why you want to have some level of strategy and approach to getting back into the markets. Because of course I want to get back in. If there's a third and final angle coming, make no mistake about it, I'm not trying to walk away from the market here. Okay, I'm trying to catch the rest of the move if there's another move to come. And if there isn't, I'm also going to be trying to get short. Okay, if there's way more downside, a counter trend bounce that rolls over, I want to be short here. Okay, I'm still a trader. I don't really care which way the market goes. I just want to be on the right side as always. And so I think the first thing to point out here, okay, is I know it's easy, especially if you're new and lacking experience, to look at this and say, that looks like a bottom is forming. That big green bar, okay, looks like a reversal is coming. I understand that if you're inexperienced, that's how you look at this. Okay, you think, well, it's already come down a lot. Okay, maybe it's back into kind of prior support-ish, this neighborhood here, and that's a nice big green candle. So I know what comes next. Big rip-roaring recovery, something like this. The reality is, okay, if we go back and look at the C19 plunge, there was plenty of these bullish-looking candles, and what came next was way, way, way more downside. Okay, so as promised, we're going to do a bar replay. Here's a few candles leading up to the top before what we saw was the C19 plunge, okay? So everything's looking gravy here, nice big strong uptrend, and then out of nowhere you'll see this thing evolved very, very quickly. And what you're going to notice here is, first of all, it looks like a normal pullback, okay? And right here, kind of similar. We've got a move back into the prior cluster and some kind of green candle. And the temptation here would be to say, okay, that move was probably overdone relative to all of this, okay? Let's maybe start to buy the dip. Let's maybe start to look and see if now is a good time to try to catch that falling knife. And as I click play and we see a few more candles, okay, this might be what's coming today. Just because we had a big green candle at the hard right edge, okay, and now the futures are quite green, does not mean that our open, we do not reverse into a big red candle. Now, watch what happens next here, okay? What happens next is continuation to the downside, okay, and you can see by the end of the week, we had gone from this initial gap to something a lot more severe. And now notice by the end of the week, on this Friday, we close quite green, quite bullish looking. And again, a lot of people, especially the ones that were inexperienced, would look at this big green candle and say to themselves, that's it. The bulls have stepped in. That's a big green candle. Everything is going to be fine. Buy the dip. They would have also been online being very toxic to each other. Oh, you're a pusillanimous if you don't buy the dip, right? You're a coward. Where are your bulls, man? Buy the dip. Buy when there's blood on the streets, right? I'm Warren Buffett. I'm the next one. I'm the next Warren Buffett. We buy when there's blood on the streets. And again, okay, without a strategy, look what happens. We get a swing, which is looking quite positive, okay, up to this green candle. And then all of a sudden, just when everyone has entered the market thinking that now's a good time to be bullish, we very quickly reverse and it gets a lot worse before it gets better. Now, I'm not saying this is what's coming today, but I am saying, having experienced this firsthand and traded through this firsthand and treated this entire move exactly the same as how I treated the current sell-off. Remember, I went flat on Friday because I've had enough experience in markets to know that once we gap down below this line and fail the daily cycle, I've seen this before. I've seen this before here. I've seen it before in Bloody October, and it's going to be seen again, okay? So this is why I was able to pull the trigger, because I know that risk happens fast. And again, it might not. We might find ourselves doing something like this very soon, into a third and final angle. But again, the truth is, nobody knows. And so we must relinquish control. We must accept that we don't know. And again, you might be thinking, well, I mean, this is well overdone. We're all the way back down here, right? Must be bottoming soon. But again, you don't know how bad it happens, okay? Risk happens very fast. Let's keep clicking through and examining these candles one at a time. So again, looks like a big bullish reversal, right? And maybe it is. But by now, we've seen how many of these? One here, a few here, okay? By now, do you trust it? Do you keep buying the dip? Because if you did, you got wrecked again, right? Look at this. This is what I mean. Risk happens fast. And again, I'm not saying that this is what's coming. But what I am saying is risk happens fast and we must protect downside, okay? Because as you can see, this thing got a lot worse before it got better again. And now the funny thing about the way markets work is as we got into this neighborhood here, okay, people are so psychologically damaged from having all their fingers cut off trying to catch knives that even if this is a chance at having a bottom, even if that is a true daily and weekly cycle low and we're about to break out, People won't buy here now because they've gotten wrecked the entire way down and all of the dip buy-in has failed to work and now they are emotionally damaged. You can only take so many losses. You can only buy the dip so many times only to get wrecked before eventually you capitulate and your mental health cannot take it. You can no longer make decisions at a high level because you've just blown up your account. You've lost too much money, okay? So in here, everybody flips bearish, having tried to buy the dip and catch the knife on the way down. And you can see what happens, okay? We start to build some structure out. And as we start to build some structure out, now a V-bottom reversal can actually come in, right? And so the question is, how do we deal with this? What's the best way to deal with this? And the simple answer is, okay, you needed only one trend line here and a little bit of knowledge of daily cycles to be able to handle this situation. That is all you needed, okay? Because if you were able to shoot first and ask questions later, and instead of blindly buy the dip on the way down, you're able to say to yourself, okay, I admit I don't know, I'm going to wait for a technical repair to occur. This is how I handled this situation. One stupid trend line. That is all I did. Actually, that's not entirely true. I also was looking at daily cycles to bottom. But this was my buy entry. This was my re-entry down here. Whilst everyone is catching falling knives, okay, I sat out of the way. I waited to see what happened. And it wasn't until we got breakout retest resumption, okay, that gave me an area on the chart to manage the risk around. In here, okay, anywhere in here with a stop below these lows was a pretty nice opportunity to stay long and strong for a long time thereafter. And if I zoom out a little bit, I'll put this on, I don't know, 10 times so it's not too long. Press play, okay, you can see this was a fantastic trade. This trade continued to be fantastic for a very, 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 very long time, okay? So all you needed was a trend line and a little bit of patience and discipline and a little bit of humbleness to be able to say to yourself, you know what? I don't know what's coming next. And that's really all there is to it, okay? If you don't humble yourself, the market will humble you. You can see this was an absolutely monster trade. And so this is how I am planning to handle the hard right edge of the chart, okay? So again, very, very similar setup to what we've got today, in my humble opinion. And it could easily come ripping out of here any day now. That's possible, but it's also possible, especially given where the weekly cycle low is. Look, we are due a weekly cycle low mid-September. So all of the dip buyers in here, okay, have no idea that they are dip buying late in a weekly cycle. And most probably we've got something like this into a weekly cycle low. And then out of here, again, trend lines will be king, cycle awareness will be king, and we can get out of here. Oh, and by the way, this one long entry would have kept you in with the stop below the lows all the way to the top before the 2022 bear market. Okay, so simple stuff works. I often say with boxing, okay, the best boxers can do the jab cross. That's all they don't need jumping, spinning back elbows, okay, or anything like that. They can do the basics well, and this is the basics, okay? Anyone can draw one trend line, okay, but the reality is not anyone can pull this off because people are too eager, okay? People don't have the patience, they don't have the ability to humble themselves and say they don't know what's going on in the short to medium term. So I said this was a very, very similar setup. You know, on Friday when I went flat, I said it was very similar, reminded me a lot of this. Again, there's no substitute for experience. And I also said it reminded me a lot of Bloody October. This was Bloody October. Doesn't look like much in the scheme of things, okay? But this was a taper tantrum. Back here, the market threw all of its toys out of the pram because of the way the Fed was handling interest rates at the time. And whilst this was only about a 20% drop over the space of 2 or 3 months, many, many, many individual stocks went down 60, 70, and 80% in this crash, okay? This was buoyed by a handful of stocks, very similar to how we've got a handful of stocks pushing the indexes to all-time highs at the moment. Most people that were holding stocks instead of just the indexes or instead of the top 6 or 7 stocks at the time, most people had 30, 40, 50, even 60% of their portfolio wiped out during this quick flash crash. And so again, I want to show you with the basics, okay? We set a trend line that makes loads of touches, okay? Yep, sure, we chopped it here, whatever, okay? And then we get a breakdown. And once we get a breakdown, now you're going to see that this is incredibly similar to C19 and also incredibly similar to today. So once again, I'm going to grab my bar replay tool and I'm going to go back to about here. And what you'll notice again is the simple stuff works, okay? But the simple stuff anyone can learn in 5 minutes. It's having the discipline to stick to the system that is challenging. So I'm going to get my replay tool and go in just a few candles in here, okay? And then we're going to click play on the thing and drag this across. And you can see, you know, we're holding the trend line, okay? Everything looks okay. And then out of nowhere, okay, notice the change in behavior. Everything's fine. We get a candle that bounces off of support and everything again looks absolutely fine, right? But then notice the difference when it comes, okay? So we're coming into support, okay? And then again, we touch support and bounce off. And right now you're thinking, lovely, okay? That's maybe even a thesis for a long, buying at support with a stop just below. But then watch how the market changes behavior all of a sudden out of the blue, okay? Big red candle on a trend line breakdown. Okay, big bearish red candle. This was a sign for you to say, uh-oh, something may be afoot here, okay? And again, as always with risk happens fast. Now in here, you better believe there was people looking left and saying, yeah, I'm buying at the prior all-time high, buying at the swing. But then notice very quickly, okay, we get breakdown, retest, possible resumption off of the prior support line, okay? Breakdown, retest, possible resumption. And again, by just taking it one candle at a time and being open to all possible outcomes, now we've got a new lower low. Okay, so whether you use the initial trendline breakdown or whether you waited for breakdown, retest, and resumption confirmed by taking out the prior low, at this point, there was no rhyme or reason to be blindly buying the dip anymore. At this point in time, it was time to say, okay, the market does not like what it is seeing right now, so we'll continue to play through a few more candles, as you can see. And again, you better believe there's dip buyers the entire way down, right? There's always dip buyers the entire way down. There's always people sitting there saying, I'm Warren Buffett, I buy when there's blood on the streets, okay? But the reality is, this was a very uncertain time, just like the C19 plunge and just like the setup we've got today. And so as we continue to let these candles play out, you can see dip buyers repeatedly get crushed over and over and over again. We continue to make lower highs and lower lows. Okay, that is not a sign of a change in market structure. Again, we are still printing lower highs and lower lows. Right now, we've got our first higher low in the setup. Okay, but again, no higher high. That is another warning sign followed by a lower low. So all of these dip buyers right now, similarly to what I was saying earlier, are having their mental health obliterated. They keep buying the dip and the dip keeps on dipping, okay? They keep being told by people online that they're a coward for not buying the dip, okay? When the reality is, staying out of the way of the market is fine sometimes. Why? Because risk happens fast. So you can see, here we go, okay? Finally, we're starting to look for signs of strength. Finally, we started to push off of the lows, but still no higher highs or higher lows as of yet. And as we continue to click through these bars, okay, we start to show strength. And for the first time, we're starting to make repairs, okay? Potential breakout, retest, resumption versus the fake out before connecting all the prior highs. If you wanted to be stricter with this trend line, you could even set it from these candles here, since we've got 3 perfect touches and a much more close to horizontal angle, okay? Remember, the steeper, more vertical trend lines, the ones that look like this, tend to have a higher rate of failure. The closer they are to horizontal, they tend to perform better. So again, we continue to click through the bars, we can continue to wait for momentum to return and a structural change. Notice at this point in time, before this candle shows up here, okay, we're still making lower highs relative to this prior high. It's not until eventually we print this candle that I've paused it on now that we finally make a higher high. Now we are starting to see shift in market structure confirmed with a trend line break. If you wanted to originally use this as your trend line, okay, that would have also gotten you in. And then again, we can start to say, okay, there's a thesis to be long here. We now have a change in market structure, a trend line breakout, and we now potentially have the ability to see some higher highs come in. Now we have an area on the chart to manage risk around. We've got breakout, retest, resumption, meaning we can put some longs on somewhere in here with a stop somewhere below either this swing low or that swing low, okay, drag this thing out and look to see if the market actually has a chance of recovering. Of course, if it's going to roll over from here and stop us out, then we can start to say, okay, we've got failed breakouts, more downside. Then we can start to look for shorts. We continue to allow this thing to play out a few candles at a time and see what happens, okay? And what you will notice is, one by one, as always, the simple stuff works the best. But the simple stuff is easy to learn. It's not easy to do. It's way, way, way harder, okay, to actually stick to a system like this, actually manage risk, not bet the farm here in case you get stopped out, and not destroy your mental health by buying every knife catch on the way down, okay? It's way easier to say you're going to do that than to actually do it. And this is why very few traders make money versus the majority of them that just blow their accounts up when these types of events show up. So again, you could have got wrecked here unless you pulled the trigger, unless you had the experience, unless you traded through a few of these. And as we continue to see more candles unfold, as we continue to find an area on the chart to give us a thesis to enter long, you can see that this is just business as normal, okay? Anyone that has been on this channel for any length of time at all knows that the Camel Crew does pretty well at staying on top of this kind of thing, okay? So again, there's no substitute for experience. And again, this simple trade setup with a little bit of discipline and a little bit of staying out the way of the market, a little bit of accepting to yourself that actually, I don't know what's going on, will yield massive results, okay? So there's massive opportunity here for us to continue to do well. And again, we would be out here at the C19 plunge and back in somewhere in this neighborhood after the repair was made to catch the rest of this. But I hope you can see, okay, there is no substitute for experience. It's the simple stuff that works. Understanding what yesterday was enables us to understand we lived through a piece of history. Hopefully that can enable us to learn, not get too disheartened, and most importantly, at the hard right edge, not be out here trying to catch knives. And so with all that said, when we fast forward to today, Okay, what have we got? We've got the potential for a bottom to come in, of course, as always. But notice we've got our downward sloping red resistance line. We've got at least an area on the chart to give us a thesis to be long. So for me, all the while we're under resistance in red, okay, all the while we're doing something like this, okay, then I don't want anything to do with this market. And I hope now that I've shown you the two prior instances, you can see exactly why. And if this thing really is the bottom, okay, if those dip buyers are really going to be rewarded this one time when often they're not, then what we should see is something like this, break out, and off we go. And then again in here, okay, just like I showed you with the prior two instances, we've got a thesis to be long. If that breakout is to fail, we've got a thesis to be short thereafter. But the key is, okay, I'm not out here trying to catch the knives, as I've said a million times already. And as I've shown you in the two prior examples, hopefully you can see now, when I say risk happens fast, okay, something like this is absolutely on the table. I know a lot of people don't want to believe that, but that's absolutely the reality of the situation, just like I showed you with the prior two instances. Furthermore, as I said, okay, if that's the daily cycle, then this current moment in time, okay, this current session is only about day 7 of an expected 36 to 40 day cycle. Yeah. So we might not be looking for bottoms until the late second week of September or even the third week of September. Okay. That tells us there's space. There is space, not only from a cycle perspective, but to the downside. Okay. Don't make the mistake of thinking just because this is a semi-bullish looking candle, this has to come next. Because as I showed you already, the cycle is down, and I would not at all be surprised if this is what plays out. Okay. But the good news here is if something like this happens, then we've got complements of a weekly cycle, and we'll have a nice trend line to break it, which means somewhere in here we could either look to play a daily and weekly cycle swing. We could also look to play perhaps a bounce off of support. And if none of that works and we stop halfway up, okay, then that's fine too. We'll have a thesis to play swings and we've got a trend line to break out. So the simple stuff works over and over and over again. But as it stands, hopefully you can see based on everything I've shown you, I can't be bullish here. I can't be bullish here until we've at least allowed some time for the weekly cycle to play out, or until we've started to repair the broken trend line. Because if that happens, we can talk about perhaps having just forced an early weekly cycle. But for now, it seems pretty early and there's no sign of technical repair. That's why I'm happy to sit out of the market. And all of this stuff kind of applies to Bitcoin, right? I see a whole heap of people saying, well, that's probably a cycle inversion, which is really bullish. It's true. If it is a cycle inversion, that is bullish. But as it stands right now, okay, looking at the bottom of these candles here, this is breakdown retest before possible resumption. Okay, now nobody knows. And it would be really nice if Bitcoin didn't do that. Okay, I've been super duper uber bullish on Bitcoin this entire time. But again, when presented with new data, I am willing to get out of the way of the market and willing to hold my hands up and accept I don't know what's going on right now. And again, risk happens fast. There is nothing to say this isn't coming next. Okay. Similarly, if we start to see repairs, if this turns into a big Dalai Lama, okay, then there will be many, many signs along the way where momentum is returning. There will be many places on the chart where we can manage the risk. And if I have to be slightly late to the trade, but I'm still in before that final squeeze to the upside, then does it matter? No. I would much rather be slightly late to the trade in exchange for a high quality setup with an area on the chart to manage the risk around. So far, anyone buying in here, okay, pretending like they know something, as I said earlier, is either inexperienced or lacks discipline to stick to a system and lacks discipline to manage risk. We will be able to use the VIX to give us some clues. I would say this, okay, whether you trade the VIX or not, the VIX will certainly give us some clues here. If this thing continues to fire off to the upside, I would suggest to you that the crash is nowhere near done, versus if this thing starts to immediately reverse, then I think we've got a lot more chance of trying to force an early weekly cycle. As I said a million times, for now, the read is simply unclear. I did want to point out a couple of things before I let you go, okay? The 210s have uninverted for the first time since July 22. So remember, that is historically speaking the signal for a recession. Once it uninverts and starts to accelerate to the upside, we see a recession. Again, it speaks to being cautious here if you are a dip buyer. But on the contrary, global liquidity is breaking out in yellow. Okay, so normally Bitcoin follows global lick, but at the moment there's a huge divergence, which again hints at perhaps being able to see a Dalai Lama and a big strong push out of here for Bitcoin to come. I still see a bunch of people out here saying that instead of ABC, maybe we've done ABCDE and are about to have that fear-driven fifth wave. I'm certainly not ruling it out. I see a lot of people talking about left translation is invalidated. See a lot of people saying no way the fifth is coming. But the reality is, okay, anything and everything is on the table. Left translated, mid translated, right translated, it's all on the table right now. And so is this fifth wave. So again, don't waste your time flying a flag of being a noob by telling people things are off the table, okay? Everything and anything is on the table, and if you're speaking in absolutes, then, like I said, just fly a flag to say that you only got 1 or 2 years experience in markets. And here's another idea, okay, that could absolutely see the left translated still be put back on the table, okay? Right now, I have no clue. I have absolutely no clue. But it would actually make kind of perfect sense if this is what was coming next, okay? And so long as this top occurs before November, then it's left translated. And it's not a clout thing. It's not about being right or wrong. It's an observation of where that top forms relative to the midpoint. That's all it is. And if it tops after November, then we say, okay, it's right translated. It doesn't matter, right? It really doesn't matter. Again, this is business. What matters is, if this move is coming, can we get back in somewhere in here? Okay, can we catch it? And most importantly, if it's going to top here, for example, can we sell somewhere in this neighborhood? That's all that matters. So you can see, really, again, there's no substitute for experience. The people that have been doing this a long time, okay, they've shown their true colors. They shot first and asked questions second, okay? They protected gains. And they're most certainly not out here calling everyone a pusillanimous for not buying the dip, okay? So understand the difference, follow those with experience, follow those with a proven track record of getting things right, and follow those that aren't married to any idea. I'm your boy Camel. I hope you're doing well in life. I hope you found value here today. And until next time, take care from me. All the best. Cheers. Bye.